Solana is having a moment. And it's not just hype. Investor interest is climbing, staking rewards are solid, and platforms like Robinhood are finally starting to take blockchain tech seriously. So what's really driving this momentum? And why are Solana investors doubling down right now? Let's start with one of Solana's most underrated strengths: staking. If you're holding Solana and you're not staking it, you're leaving serious money on the table. While Ethereum staking typically lands you around 2 to 3% annually, Solana, you're looking at anywhere from 7 to 11%. That's a major incentive, especially in a sideways or even bearish market. And that's not just good for investors. It's great for the Solana ecosystem. Higher staking rates drive participation, strengthen the network, and boost decentralization. The more people who stake, the more secure and scalable the network becomes. It's a positive feedback loop, and Solana is doing it better than most. We're also seeing some big moves from platforms like Robinhood, which is beginning to take blockchain a lot more seriously. And that's a huge win. When major fintech players start embracing crypto infrastructure, not just offering coins for sale, but integrating real blockchain functions, it signals something bigger. Mass adoption isn't just a talking point anymore, it's starting to happen. All of this points to one thing: growing confidence in Solana's long-term role in the blockchain world. Whether it's for speed, scalability, or real-world usability, more developers and investors are choosing Solana. And as a company that's fully focused on Solana, staking, ecosystem support, everything, we see the growth firsthand. The future of Solana looks increasingly solid. The more tools, apps, and platforms that help users engage with Solana, whether it's staking, DeFi, NFTs, or beyond, the stronger the entire network becomes. And for investors, this is a rare combination of performance, accessibility, and return potential that you just don't get everywhere else in the crypto world. If you're in Solana now and you're staking, you're not just earning, you're building the future of one of crypto's most promising ecosystems.
Continued adoption and interest by investors for Solana. And of course, with Solana, if you're an investor, staking is kind of a must-have because you're, unlike ETH, where you're maybe walking away from 2 or 3% returns, on Solana, you're in the 7 to 11% range. So I think it's a very good sign for Solana in the ecosystem. Of course, we want to see as one of the leading staking providers for Solana, we're a Solana-only company. Anything that helps with the adoption and getting Solana in front of people is a very good thing, especially in the context of some of the other interesting moves that Robinhood is making in terms of really taking blockchain technology very seriously.
The world of crypto ETFs is heating up, and Solana is quietly making moves that could reshape the next big wave of adoption. But behind every headline is a complex game of timing, regulation, and, let's be honest, some eyebrow-raising decisions from the SEC. Right now, there are about 6 to 9 major players in discussions with the SEC, all aiming to launch a Solana-based ETF. And yes, we're one of them. We've teamed up with Canary to file for what we call the Marinade Solana ETF. It's an active application, and things are moving. At the same time, we're also in conversations with other ETF providers, looking to support their efforts with our infrastructure and product suite. This isn't a one-player game. It's a fast-moving, collaborative race. And if Solana ETFs get the green light, it could bring serious legitimacy and capital inflows to the ecosystem. Now, here's where things get interesting. If you remember the Bitcoin ETF drama, it wasn't exactly smooth sailing. What we saw was, frankly, a bit of a debacle. Years of pushback, endless delays, and then, out of nowhere, the SEC approved every major Bitcoin ETF on the exact same day. And get this, Grayscale, who spent years in legal battles with the SEC, basically carried the industry to that point. Their lawsuit forced a change. But instead of being rewarded, they had to share the spotlight and the market share with brand new entrants like BlackRock, who came in late but instantly gained dominance thanks to name recognition. So when we talk about Solana ETFs, the big question is, will the SEC do the same thing again? Will they delay, and then approve all applicants at once, leveling the playing field, regardless of who did the hard work? Because make no mistake, whoever gets approved first, or even who partners with the right infrastructure, will have a major edge. These ETFs aren't just about exposure. They're about distribution, retail trust, and institutional inflows. That's why companies like ours are working not just on our own application, but actively supporting others in the race. The Solana ETF race is on. And just like with Bitcoin, it won't just be about the asset, it'll be about who's prepared when the door finally opens.
So let's break down the Solana staking, or the Solana ETF. There's about 6 to 8 to 9 providers who are in various conversations with the SEC and have various applications. We are one of them. We partnered up with Canary, and we have the Marinate Solana ETF that is an application. We're also in conversations with other ETF providers about supporting them with our product as well. So it's a very dynamic piece. So one question that's out there, you saw this kind of strange thing with the whole Bitcoin ETF. I would call it debacle, I think it's fair to say, where it was 0 to 10 years for approval, and the SEC just approved everyone at the same time. Right. So you had Grayscale that basically carried the industry with their litigation against the SEC, in a way get punished, or certainly not rewarded for all those years of work, with new entrants like BlackRock being approved the same day, having that brand recognition and being able to grab market share.
We may be at a critical turning point for Solana, a moment where decisions made now could either secure its decentralized future or concentrate too much power in the hands of a few. And if that sounds dramatic, let's take a closer look at what's already happened with Bitcoin. Today, nearly 6% of all Bitcoin is now locked up in ETFs. That's a massive shift of assets into structured financial products. But here's the kicker. The vast majority of that Bitcoin is custodied by a single company, Coinbase. That means around 5% of the entire Bitcoin supply is sitting in Coinbase custody, concentrated, centralized, and arguably vulnerable. So ask yourself this: what happens if we repeat that mistake with Solana? Imagine a future where 5% or even 10% of all SOL is controlled by a single validator, or worse, a private single-instance validator powering every ETF. That level of centralization, it breaks the very premise of what Solana was built for. And that's where our concern lies. There are some great companies out there in the Solana space. We know them, we work with many of them. But when those companies sell their infrastructure to ETFs, many are offering single validators or closed systems. That's a dangerous precedent. So, here's what we decided to do differently. We created something called Select. It's a carefully curated pool of 30 institutional-grade validators, geographically distributed, professionally managed, and built for redundancy, reliability, and decentralization. This isn't a theory, this is already powering the Canary Solana ETF application. And it's the same architecture we're working with other ETF providers to implement as well. This isn't just about getting another ETF across the finish line, it's about getting it right. Because if ETFs are going to be part of Solana's long-term story, then we need to make sure they support the network, not accidentally centralize it.
We are concerned that we are at a centralization moment for Solana. And so what do I mean by that? If we look at the Bitcoin ETFs, 6% of Bitcoin is now tied up in ETFs. Almost all of them are with one custodian, Coinbase. Let's say it's basically 5% of Bitcoin just on the ETF side is with Coinbase. What does that mean? And that's where we're concerned, where there are some great companies and we're in co-opetition with many of them. And when they sell to ETFs, they sell one validator, one
Right.
private instance. So what if Solana, suddenly 5% of Solana is tied up with only one validator, or 10% of Solana? What does that
Yep.
mean for the ecosystem? So that's why we created Select, which is a pool of 30 validators, all institutional grade. And that's what the Canary ETF is going to be, and that's what we're working with other ETF providers on as well.
We've seen this pattern play out before. Convenience often beats best practices. But Solana's speed and scalability only matter if it stays decentralized. Once a few validators hold too much influence, you lose censorship resistance, you lose resilience, and eventually trust. So, if you're an ETF provider, a developer, or even a retail investor looking at Solana long-term, these decisions matter. Select isn't just a product, it's a statement that decentralization isn't optional, it's foundational. Solana is fast. It's powerful. It's growing. But to protect that future, we have to build it the right way. Whether it's staking, infrastructure, or ETFs, decentralization isn't a checkbox. It's the mission. If you care about the future of Solana, whether you're a staker, an investor, or a builder, now's the time to stay informed and demand more from the infrastructure we're all relying on. Hit like, subscribe, and drop a comment below. Let's keep Solana decentralized, and let's do it the right way.